All right, so looking at the daily chart here, these are the same annotations we had from Monday session when we called the sell side there and took it to the bank, trading into that daily fair value gap, right? Pretty straightforward read there. Now that we've repriced to the low of this gap and we've dug into this last down close candle here, we are seeing a bit of a retracement, which is reasonable, right? To see it retrace from here. So what I am watching is this fair value gap in here. One of the reasons why I'm not anchoring it to the volume imbalance before I get that question is because then this would just be a massive imbalance here. And it's really hard for me to do anything with that information. So I'm going to use this range here as the fair value gap. So using this level here as the imbalance on the daily chart, the key level I'll be watching. Again, looking at the daily chart, right, we have been seeing bearish order flow. So again, I'm not trying to call a bottom in this market. However, if order flow communicates as strong, then again, we take that information as we get it. So right now, I'm suspecting that this fair value gap is going to send price lower because I have no reason to believe otherwise. However, if we start to show strength through that daily imbalance, then I'll have to take my attention to other premium levels. If we look at the range that we're trading in here on the hourly, we have this high down to this low. And you may be asking, why this high? Why not this high here? You can use that high. I'm just going to use the high where the energetic run begins from, which is here. So we've traded up into a short-term premium. I want to see how we trade there because if we're going to continue to the downside, then this daily fair value gap should send price lower and we should reject from a premium, right? So that's something I'm watching right now. Just staying in line with the bearish bias that we've been having for the past couple weeks or so. Again, previous day's high is here, which is also low of that daily fair value gap. And then watching this wick here, right? So we created a large wick on the NFP release. And then the bodies are respecting the lower 50% of that wick and the lower half of that daily fair value gap. So that's something I'm watching for potential weakness. If we get weakness, then my attention goes to this fair value gap in here. And then from here, we'll see how we trade, right? Very similar to what we did with this inversion fair value gap on Monday, right? We opened here at 9:30. Let the market tell you what it's going to do. If it's going to be bearish, it's going to stay in the lower half. And then again, that just gives an easy price run into previous day's low and that daily gap, right? So again, doing the same things every single trading day. So I'm going to pull the trigger once more there. See if we can get a flush. So stop, just going to go above the high here. Let's see if we can get the pre-market lows here again. Going to look to take off 2 here at the sell side. So buy limit. All right, again, employing that 15-minute fair value gap. Now we want to see it stay in the lower half here. All right, first limit order paid. That gives about 50 handles. So 50 handles on 40% of the position. Then we'll see if we can get the rest to flush into the pre-market lows here. Pre-market lows, next draw. Trimming risk here. Again, now that we've displaced away from that 15-minute gap, we don't want to see it get back above midpoint. Let's go up to the 15-minute chart. It's that 15-minute gap. We're now breaking down through that. Exactly what we wanted to see to confirm lower prices, right? Just on these wicks here, not giving a strong close below it, but now completely disrespecting it here to the downside. So now that we're down here, I want to see a strong close and just see us continue melting lower. I like how this wick here, we're disrespecting that to the downside, right? Not finding support at midpoint, melting through it. All right, that pays the trader there below the low. So I'm going to let this thing keep dropping. 5-minute chart, everything is bearish. 15-minute fair value gap melted through. Why take partials aggressively here? Why was I looking to take off most of the position here? Because if you look at the dealing range that we're trading in from this low to this high, that's our dealing range, right? So this is a discount market. So as soon as we're getting into a discount, equal lows in a discount, I want to pay the trader. Right, so stop goes better than break even. So now worst case scenario, we are making money today. So very difficult trading session, guys. If you guys struggled a bit today, it's to be expected, right? It was not even an easy one for me, right? I could see what we were looking for. We framed the entire price run, right? Looking at the hourly chart. Gave you guys the premium, the discount, right? The PDRA matrix on the hourly time frame, this high to this low. Market traded up into a premium market. Like I told you guys, I'm not trying to call a bottom in this market, right? So we're using bearish order flow. So we use this key daily fair value gap to frame our short setups, right? So framing the short setups inside this daily gap, inside of a premium of this range. And now looking for continuation here to the downside, right? So you see how we're framing the market top down. Daily chart. You see how the daily candle's forming, open, high, reaching for a premium. That's the manipulation. And now we're looking to trade the distribution here on the downside, right? So top down, bottom up, everything we're doing makes sense, right? And it's consistent with everything that we're learning here. So if the market's going to be bearish, should this fair value gap back to support, or should we melt down through it, right? That's why you can't pattern trade these levels. You have to know how to read them. So the fact that we flush through it is exactly what we want to see. So looking for more continuation down to these London lows based off everything we're seeing. And then look at the bodies here, right? Staying in the lower half of that daily gap here, right? This fair value gap performing exactly as we wanted to see it do. We want to see it trade down through it. And you guys can, the recording will always be available. So you guys can see in the pre-market analysis, we were indeed looking for the market to trade through this gap if we're going to be bearish. And that's simple gap theory, right? If we're bearish and we're above a gap, market should get below it, resistance, sell off. And now I'm making it sound easy in hindsight, but not an easy trading session at all with this erratic price action. In fact, very, very difficult. So if you guys struggled today, it was difficult, right? Even I'm feeling the heat on a difficult day like today, right? It takes some huge nuts to get out here and trade live in this type of volatility. So hopefully you guys can appreciate that. So this level here that would be used as support if we're bullish, but now that we're on the sell side of the curve, will be used as what? Resistance, right? Same thing here. So if I'm looking at how far the market can retrace, in my mind, we have these down close candles here and this fair value gap. I would not want to see it retrace more than that. And let me show you guys what I'm referring to here. Make this gray. So these two down close candles, market drops down into it, uses it as support. That's a bullish order block on the buy side of the curve. Now that I'm thinking we're on the sell side of the curve and likely going to trade down into here, I'd want to see this act not as a bullish order block, but as a bearish mitigation block, meaning it trades up into it, uses it as resistance, and sells off. So from where we closed, from where we closed to where we opened here today, looking at the opening range, right? We use this level as a target here, mid gap, but now that we're trading back up into it, you see how it's using its resistance, which is why having the opening range gap on another template, very helpful, right? Because you want to be able to see these key levels. So the market trades up into mid gap using its resistance, exactly what we want to see. So next draw is these equal lows here. I want to see us accelerate through that because then that'll give us a clean price run into the settlement price or the previous day's closing price. And then looking at the retracement here, how high did it retrace? The high of the mitigation block here. So got some very powerful things that I'm still going to teach you guys in mentorship, but of course we have to get through the basics first, right? The basics that you're going to lean on, and then I'm going to give you guys stuff that's going to make you absolute fucking monsters on the charts. So next draw here, sell side. Here, and that's the 41 level. So that 41 level also overlaps with the settlement price. There's two things converging there. So I like that as a draw right now. All right, that should fill me. Boom. Let me put the stop here above this up closer. That's good. So stop's about 150 points of profit, so comfortable with that. Stop loss or take profit, either one is good. All right, that takes me out there on the balance. So that takes me out there on the balance, not willing to sit through that much of a retracement. It already got really close to my limit order here. So when that's the case, I'm just going to trail the stop really tight because if it takes me out, I'm not sweating a few points, right? So that takes me out there. So 2 of 2 in terms of green days this week, live traded Monday, all again live on screen, and doing the same here today and closing out a green week up to this point.